Welcome, deep divers. Today, we're diving into a story that kicks off with, honestly, one of the most jaw-dropping messages from a scammer I think I've ever heard. Just listen to this quote from someone who allegedly just vanished with billions.
Hello, comrades. I am Mr. Huang. I am already abroad. Everyone's IQ matches their wealth. Because your wealth does not match your IQ, I want to make them match. I just took away the wealth that doesn't belong to your IQ. I hope you can thank me. Be grateful to me. Remember this lesson I have given you.
Wow. I mean, the sheer audacity, the arrogance. It's chilling, isn't it?
It really is. It gives you a stark look into the mindset here.
Absolutely. It's almost like he's mocking them.
Completely. And that message comes from the founder of a company called DGCX Xinkangjia. He was involved in a massive stablecoin scam that just collapsed in mainland China. So our mission today in this deep dive is to unpack this. This is a huge one. We're looking at potentially close to 2 million people losing somewhere between 13 and 18 billion yuan. That's billions of US dollars.
It's staggering. We're going to pull out the key insights from the sources you've shared with us, look at the complex methods they use, the bigger picture for digital asset regulation globally, and really what this means for you trying to navigate this space.
Okay, so let's get the scale right away. This collapse, DGCX Xinkangjia, it happened super recently, June 26, 2025. And the numbers, as you said, are just enormous. Somewhere between 1.8 and 2 million investors affected. Losses starting at 13 billion yuan, which is roughly 1.8 billion US dollars, maybe even over 18 billion yuan.
Yeah, it's definitely one of China's biggest digital asset frauds we've seen.
For sure. And, the official reaction tells you a lot.
Right. The authorities jumped on this pretty quickly. The Shenzhen Municipal Task Force for Preventing and Combating Illegal Financial Activities put out a warning, wasn't it July 7th?
Yeah, July 7th. And they specifically called out how these scam groups misuse terms like stablecoins and virtual assets to trick people.
It's a classic tactic, using buzzwords people might have heard of but don't fully understand to create this illusion of legitimacy.
Exactly. Yeah. And it points to that bigger challenge for regulators everywhere, right? How do you warn people about the risks without just scaring everyone away from genuine innovation?
Yeah, it's a fine line. Okay, so let's peel back the layers on this DGCX Xinkangjia. Who were they, actually?
Well, the company, Xinkangjia Big Data Limited, was supposedly founded back in 2021. The name itself seems to come from the founders, Wang Xin, Xiao Jinkang, and Wang Yanjia.
Okay, but the foundations seemed shaky from the start.
Oh, incredibly shaky. They claimed 30 million yuan in registered capital, but get this, zero actual paid-in capital, and apparently was flagged pretty early on for business anomalies.
So red flags right out of the gate, and their claims were ambitious.
Ambitious is putting it mildly. They called themselves a Middle Eastern financial giant. Their slogan was all about connecting Dubai capital, creating a global wealth platform.
Dubai capital. So they tried to link themselves to legitimate players.
Precisely. They falsely claimed a partnership with the real Dubai Gold Commodities Exchange, the DGCX, which, is a huge regulated derivatives exchange in the Middle East.
And did the real DGCX know about this?
They did, and they repeatedly denied any connections since last November. But the scammers just kept using the name, hoping people wouldn't check. It's textbook misdirection.
Okay, so false legitimacy established. Then came the hook, the actual scam mechanism.
Yep, the classic high-yield Ponzi scheme. They promised huge returns on high-yield crude oil futures.
Crude oil futures?
Yeah, and they even claimed a strategic partnership with China National Petroleum Corporation, CNPC.
A state-owned giant? Really?
Well, the reality was just some equipment procurement deal, hardly strategic. But then things got really crazy in May 2025, just before the collapse.
What happened?
They suddenly jacked up the promised daily yields from an already high 0.8% to an unbelievable 1.5% per day.
Per day? What does that even work out to annually?
It works out to a completely impossible 547% annualized interest rate.
Wow, okay, that screams Ponzi scheme, trying to suck in cash before the music stops.
Exactly. And they launched this wild recruit for luxury car campaign, basically bribing people with potential cars to promote the scheme like crazy on social media.
So they were really pushing that recruitment angle hard.
Absolutely. It was built like a pyramid scheme. They had this military-style structure, 9 levels deep.
9 levels?
Yeah, and they offered daily commissions, up to 10%, just for bringing in new investors. It's designed to spread exponentially.
And it clearly worked, at least for a while. Didn't they pull in a huge amount right at the end?
They did. On June 25th, 2025, the day before it all came crashing down, they reportedly received over 120 million yuan in deposits. in one day.
Incredible. And mostly from smaller cities.
Yeah, about 60% from small to mid-sized Chinese cities. People perhaps less exposed to these kinds of warnings. And then, boom, June 26th, the platform collapses.
The human impact must be just devastating. We hear numbers, but these are real people.
It's truly heartbreaking. The sources mention specific stories. Like a family of 6 in Yiwu, Zhejiang. They lost 6.5 million yuan. Penniless. Right when an elderly relative needed 100,000 yuan for urgent medical care.
Oh, that's awful.
Yeah. Or a grocery store owner who got lured in by team bonuses. Lost everything, persuaded friends and family to invest too, and now faces total isolation.
And probably immense guilt.
Immense guilt. And then there are darker stories, like member in Shandong who supposedly recruited over 1,200 people and then just vanished with 20 million yuan himself.
So layers upon layers of victims and perpetrators within the scheme itself.
Exactly. It shows how these things corrupt relationships and communities.
And the crazy part is the warning signs were there for months, right?
Oh, absolutely. Alarms were ringing long before June. They started imposing withdrawal restrictions back in January 2025.
January, so like half a year before the final collapse.
Yeah. By March, they suspended instant withdrawals altogether. In May, a whole branch in Guizhou got shut down. And Chinese authorities, they'd issued at least 12 warnings in the year leading up to it.
12 warnings, yet people kept putting money in.
It speaks to the power of those promised returns, the social pressure, maybe a belief they could get out before it crashed.
And what's the official line now for the victims?
Well, the Shenzhen task force was pretty blunt. They basically reiterated China's stance. If you participate in illegal fundraising, you bear the responsibility for your own losses.
Tough stance.
Very tough. It reinforces China's complete ban on all crypto transactions, which has been in place since 2021. Essentially, you engaged in banned activity, the consequences are yours.
Which is quite different from how some other places are approaching crypto and stablecoins.
Totally different. Look at Hong Kong, right next door. They just passed their stablecoins bill on May 21st, 2025.
Right, trying to regulate it, not ban it.
Exactly. It aims for strict regulation, yes, but also potentially to attract legitimate innovation.
Yeah.
Trying to become a benchmark for the region.
And we're seeing similar moves elsewhere too, US, South Korea.
Yeah, there's a global trend towards regulation. The US Senate has the Genius Act being discussed. South Korea is looking into one-pegged stablecoins. It's this global balancing act.
And between control and innovation.
Precisely. And this whole DGCX Xinkangjia thing, it fits into that wider, disturbing pattern of what they call pig butchering scams.
Ah, yeah, I've heard that term. Explain that a bit.
So these scams have defrauded people globally of, estimates say, over $75 billion, often using crypto, especially stablecoins like Tether.
Why stablecoins?
Because they seem safer, less volatile. The scammers build trust over time, often online, maybe romance scams, maybe investment advice. They fatten up the victim with small initial returns or just promises.
Making them feel comfortable, trusting.
Exactly. And then, when the victim put in a large amount, they butcher them, take all the money, and disappear.
That's grim.
It's incredibly grim. And sometimes it even involves human trafficking, people forced to work in these scam compounds.
Unbelievable. Okay, let's pause for a second here. We've laid out the scale, the awful human cost, the regulatory picture. Let's bring it back to that initial quote from Mr. Huang, that message about IQ and wealth. What does that tell you? What's your gut reaction to why, despite warnings, despite impossible promises, so many people fell for this? What do you think is going on there?
It's such a key question. And I think Mr. Huang's quote, disgusting as it is, hints at part of it, this cynical exploitation of hope and maybe, a lack of financial literacy in some cases.
Hope for quick wealth.
Absolutely. That fundamental desire is powerful. These schemes package that desire with, like we said, those seemingly legitimate labels, DGCX, CNPC, stablecoins.
That word stablecoin itself is tricky, isn't it? It sounds safe.
It does. It implies stability, the opposite of volatile cryptos like Bitcoin. So for people maybe wary of crypto's wild swings, stablecoin investment sounds plausible, secure even. It helps bypass critical thinking.
Right. But ironically, the actual stablecoin, USDT or Tether, was the tool they used to move the money and make it disappear.
Exactly. That's the core mechanism. They require members to deposit funds using USDT. And USDT, being on blockchains like Tron or Ethereum, allows for relatively free, fast cross-border movement.
Which is great for legitimate uses, but
also great for scammers trying to get money out of reach quickly. Yeah. Its decentralized nature makes it super hard for authorities in one country to just freeze or track comprehensively. especially once it starts moving.
And they didn't just move it directly, did they? They used laundering techniques.
Oh yeah, highly sophisticated stuff. They use tons of intermediary personal wallets acting as stepping stones or hops. Yeah, think of it like scattering breadcrumbs. Money goes from victim to wallet A, then B, C, D, splitting, combining. Over 80% of illicit crypto value reportedly goes through these hops. It makes manual tracing a nightmare.
And they combine funds too.
Right. They often split funds from many victims into lots of small wallets, then suddenly sweep them all into one big consolidation wallet right before trying to cash out or move it off chain.
Making it harder to link the final cash out point back to specific victims.
Exactly. It muddies the waters for compliance teams.
I heard they use mixers and bridges too.
Absolutely. Crypto mixers like Tornado Cash, even though it's sanctioned, it saw a resurgence. These services basically tumble funds together from different sources to obscure the original owner.
Like a digital laundry?
Pretty much. And cross-chain bridges let them move assets between different blockchains, say from Ethereum to Tron or others, which adds another layer of complexity, breaking the trail on a single chain.
And didn't the Xinkangjia guys use Tornado Cash for a huge amount?
Reportedly, yes. Something like $1.8 billion worth of USDT was moved through Tornado Cash to a shell company in the Cayman Islands.
Cayman Islands. So offshore, difficult jurisdiction.
Precisely. And the estimated recovery rate for funds going through mixers like that, less than 5%. The money is effectively gone for most victims.
Wow. And where do they actually cash out? Turn the crypto back into regular money?
That's where some over-the-counter or ATC brokers come in, especially ones operating with lax standards. Sources mention some in China, identified by Cloudburst, advertising things like 24-hour self-service redemption via Telegram.
Via Telegram? Seriously?
Yeah, for millions of USDT daily, often without proper Know Your Customer, or KYC, checks, no real ID verification. That makes them a magnet for criminals needing to cash out illicit crypto.
So the whole ecosystem, from recruitment to laundering to cash out, was carefully constructed.
Definitely. And then the final piece, the escape. The founder, Huang Shen, reportedly got himself a St. Kitts passport beforehand.
A second passport?
Yep, citizenship by investment, likely.
Yeah.
And he transferred assets to Canada well in advance, all of which makes international investigation and asset recovery incredibly difficult.
Money moving globally, instantly, while legal systems struggle to keep up.
That's the fundamental challenge.
Okay, so tying this all together, what's the big takeaway here about illicit finance and stablecoins?
Well, it really underscores that stablecoins, despite their potential for good, like revolutionizing payments, making cross-border transfers faster and cheaper.
Yeah, from days down to minutes, potentially.
Exactly. But that same ease of movement makes them attractive for illicit use. And interestingly, stablecoins now apparently account for the majority of illicit crypto transaction volume.
More than Bitcoin. Why?
Partly because criminals, just like legitimate users, often prefer stable value. They don't want their illicit gains wiped out by market volatility before they can launder or cash them out.
That makes sense. So law enforcement needs new skills.
Absolutely. They need blockchain tracing expertise plus traditional money laundering investigation skills. Because crypto is now used to launder proceeds from all sorts of crimes, drug trafficking, fraud, not just crypto scams themselves.
But can technology help fight back? You mentioned analytics tools.
Yes, thankfully. Tools are getting better at spotting red flags. Things like patterns of transfers just below reporting thresholds, sudden use of intermediary wallets before hitting an exchange that does require ID, those consolidation wallets we talked about, even unusually high fees paid to use mixers quickly. These can all be indicators.
So summarizing the different perspectives, we have China's outright ban, aiming for control, but maybe driving activity underground.
Right, versus Hong Kong's approach. Strict regulation, but trying to harness the tech, risking attracting bad actors if not careful.
And even within China's orbit, big tech firms like JD.com, Ant Group are apparently interested in yuan-pegged stablecoins for international trade. So that tension between control and innovation isn't going away.
Not at all. And globally, regulators like the FATF, the EU, US, Singapore, UK, UAE, they're all pushing for stronger anti-money laundering and counter-terrorist financing rules, using tech like Chainalysis to screen transactions. But, as the Xinkangjia disaster shows, even with all that, scams happen. Investor awareness, your ability to spot the red flags yourself, that remains crucial. It's like the last line of defense.
It really drives home that dual nature of stablecoins. Huge potential, huge risk if misused or unregulated.
Precisely.
So let's leave our listeners with a thought. Connecting this to the bigger picture, Xinkangjia was devastating, right? But it forces us to think about trust in this new digital world. We know issuers like Tether and Circle can technically freeze illicit funds sometimes. Regulators are building fences. So, thinking ahead, what new forms of digital trust might emerge? And maybe more importantly, how will you personally evaluate these things in the future? How will you protect yourself and maybe help others avoid scams like this?
That's the critical question going forward. How do we build and verify trust in this rapidly evolving landscape?
Lots to think about. We really encourage you to keep digging into these topics yourself. Explore the themes we talked about today, and please share your thoughts with us. Thanks for joining us on The Deep Dive.